Welcome to the Riskwiser Zone, the show where we dive into the world of stocks and finance to help you make informed decisions about your investments. We've got a lot to cover on the show, but first, let's take a look at what's been happening in the markets. The big story right now is the ongoing conflict in the Middle East and its impact on global oil supplies. With about 13 million barrels per day of global oil supply shut in due to the war and the closure of the Strait of Hormuz, oil prices have been volatile. Just yesterday, we saw crude prices add to their losses after the U.S. Treasury issued a license authorizing some Lukoil transactions outside Russia under its U.S. general license. This move has raised concerns about larger global oil supplies, which could put downward pressure on prices. However, it's worth noting that the International Energy Agency has warned that the recovery of damaged energy facilities in the region could take as long as 2 years. Meanwhile, OPEC Plus has announced plans to boost its crude output by 260 barrels per day in May, although this production hike now seems unlikely given the current situation. Saudi Arabia's state producer, Saudi Aramco, has also raised the price of its main oil grade to Asia by $17 a barrel for May delivery, which is the biggest jump on record. In other news, the U.S. stock market has been reacting to the latest developments in the tech sector, with some big names making headlines. We've seen significant gains in the shares of companies like Tesla and Amazon, while others have struggled to keep up. From the U.S. Federal Reserve's latest moves to the ongoing trade tensions between major economies, we'll cover it all on the Riskwiser Zone. So sit back, relax, and get ready to make sense of the markets. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of manufacturing and trade, where a recent rebound in sales has caught the attention of economists and industry experts. According to Statistics Canada, manufacturing sales rose by 3.1% in February, led by a significant increase in transportation equipment sales. However, as Alan Arcand, chief economist at Canadian Manufacturers and Exporters, cautions, this uptick may not be a sign of better things to come. The shutdowns at some Ontario automakers, which were longer than anticipated, have skewed the numbers, making it difficult to read too much into the big increase in February. In fact, compared to February 2025, sales in the transportation equipment industry were down 10.2%. Arcand believes that the United States trade policy has had a significant impact on total manufacturing sales outcomes, with year-over-year sales down 4.6% in February. The upcoming Canada-United States-Mexico Agreement (CUSMA) renegotiations will be a crucial indicator of the future of the manufacturing industry. A range of potential outcomes could emerge, from a 16-year extension of the current agreement to a significant reworking or even a member state withdrawing from CUSMA. As Arcand notes, the uncertainty surrounding these negotiations has already led to investment in the industry freezing up over the last year. As we consider the complexities of international trade and manufacturing, it's essential to approach the topic with a nuanced perspective, recognizing both the challenges and opportunities that lie ahead. The interplay between trade policies, industry trends, and economic indicators will continue to shape the manufacturing landscape, and we'll be keeping a close eye on these developments. Welcome back to the Riskwiser Zone. We've had a fantastic discussion so far, and now it's time to wrap up with our closing segment. Today, we're going to talk about some of the latest insights from Jim Cramer, a well-known financial expert. He's been sharing his thoughts on various stocks, including Citigroup, Bank of America, Abbott Laboratories, and more. According to Cramer, Bank of America is expected to deliver solid results, making it a good choice for investors. He also discussed Abbott Laboratories, which he finds tricky due to its recent decline in stock price. However, with the company's acquisition of Exact Sciences, Cramer believes it's a great time to buy, as it will accelerate Abbott's growth rate. We also heard about Cramer's thoughts on Citigroup, where he expects solid results as well. Additionally, he mentioned that while some stocks may have taken a hit due to current market conditions, they still have potential for long-term growth. It's essential to remember that investing always involves risk, and it's crucial to do your own research and consider multiple perspectives before making any decisions. While Kramer's insights can be valuable, it's also important to stay informed about the latest market trends and news. As we conclude today's episode, we want to remind our listeners to approach investing with caution and to always prioritize their financial goals. Whether you're a seasoned investor or just starting out, it's essential to stay informed and adapt to changing market conditions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.